Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Scott Red Dog Redler on the line. He's Chief Strategist at T3 Live and T3 Trading Group. Scott, we missed you last week. Did you have a nice vacation?
Yes, I did. Thank you very much. It was away for a wedding with the family, and it was a lot of fun. It's always good to do, but it's always good to be back as well.
And you come back in the Dow, that is the meaningless Dow, has a 7-day losing streak, the longest in 4 years. Does it feel that way to you?
The Dow has been not acting well pretty much for the last month or so. So last week probably wasn't too much of a surprise. I think maybe this morning was a little bit more of a surprise.
Yeah.
But I guess it's the way it's been for 2015. You have the Dow Jones below the 200-day. If you look at the diamonds broke below it earlier in the week. So at least to follow the rules. When you're a momentum trader, you want rules that you follow actually happen. So when the diamonds were the first to break below the 8 and the 21-day, and then even the 200-day, some traders probably were happy to have it down multiple days to at least show some follow-through. So at this point, the Dow's going to probably be up 120 points to start. I would think if you map out resistance on the diamonds, you'd probably, the sellers would probably want to reject price around 176, 176.40 if they want to, keep some control versus just, these indices and sectors bouncing right back into the range that they somewhat fell out of last week.
Yeah, I mean, if we look at now, we're almost 30 points above the low from Friday. I mean, just on days like this, I mean, that's just buying stuff. I mean, I'd really have to get something really cheap, in order to be going long off the open here. Do you kind of feel that way, or you just wait for your... Do we just have something break on Twitter here? We just broke above $28. Do you see any news coming on that?
I'm in my studio right now.
Okay, I'm asking.
So
I'm asking Brent here.
I'm not exactly sure, but I do actually have some calls on.
What do you got going on? Tell us about it, Scott. What do you got going on Twitter?
Well, after earnings, you figured there's not going to be another catalyst in Twitter until lower prices happen, and the whole conspiracy on how they bashed the conference, the conference call to make it look weak and have it be sold. So then somebody comes in and probably buys them out, so all their restricted stock gets taken away. So anyway, technically it was broken, story-wise broken, CEO gone. So when it broke below 30 around 29, I'm like, I'm going to try and cost average into some September 18 calls, below 29-ish, thinking that at some point, some kind of story will break, how someone's looking at them and it bounces back to 33, and do it that way versus buying the stock. Because if you just buy the stock down, you never know where it's going to go. People did that in Yelp and they got their clock cleaned. So at this point, I really think the only story in Twitter is for them to get taken over, unless it's going to be, a CEO that someone truly loves, and that's going to then get your bounce and then take time for him to figure out, or the sheet to figure out his mission and the traction of earnings. Because last quarter, the earnings were fine, just, moving forward, they said they broke might not be able to happen. But anyway, we'll see if today holds. I think, like what you were saying more importantly about the market, is it's, this 2015 frustration continues, right? Last week we were down 6 days. The S&P held on to above the 200-day by a thread. Prudent traders definitely, at least in my camp, would not be, buying as much stock as they can into the weakness on Friday. When you had China that did look like it could be vulnerable, and lots of sectors and stocks broken, and the oscillators weren't even that oversold. So you come in today up 14 handles, and we all have to figure out whether it holds and how do we get involved, or whether there are areas to fade, if it doesn't stick. So it's that same game we've been playing pretty much all year, where you have to buy them when they look horrendous and sell them when they look like they're going to break out until that changes.
Right, trading range, buying the top of the range, and sometimes you get the bottom of the range in one day and top of the range just a couple days later, so being nimble. Just a quick take here on Apple. Finally broke down below its 200-day moving average. I know you've been a little bit cautious on the stock here. Starting to get your interest yet here on the long side?
I think you look at, about a week and a half ago, well, obviously after earnings, you had that gap down that never got filled. That gave you some clues of more weakness to come, and then that bear flag around 122. Last week, It hit a 112 low, and you see that small little wedge developing, that lower wedge in Apple. So, I think it's trading 116.50 right now, or 116.60. My gut tells me I think it tests 119 to 120 before, taking out that 112 low, if that's going to take it out. I feel like it could probably rally this back, retest the 200-day, and that's at that spot, it'll figure out whether or not it gets rejected there, and then we head lower, and then that will give us some clues that the market's going to head lower. But if the market wants to sustain this rally, I don't think it'd be too hard to get this thing back towards 119 in the next few sessions. But first step is closing above 116.50.
Yeah, I think you're kind of agreeing here with Anne Marine, who was on earlier. There's looking for a little pop here, but still a little bit of weakness in it. Want to ask you about commodities. Cover of Barron's, commodities, time to buy, talking about crude, talking about gold, talking about the beans here. And, it's kind of slippery slope here because a lot of times, when you have a collapse in the commodity markets, it kind of points towards, a recession, an overall recession. Now, first, are you taking a look at any commodities or commodity-related stocks? And also just what are the implications of weaker commodity prices for our economy?
Well, I actually like a market where commodity prices fall, and I'd rather have a stronger dollar and leadership from banks and tech. If you remember, in 2007, commodities were the leader. That's when oil was breaking above 120, 130, when commodities were going nuts. And truly, commodities do nothing for the world except for make people spend more money out of their pocketbook. So I'd rather see commodities weaker, and I'd rather see markets stronger, and that's what you have with the push-pull right now on whether the Fed could raise rates. So, anyway, I'm not a fundamentalist or an economist, those are just my initial thoughts. I like when markets are led by tech, the Russell, and the banks, not the commodities. But you look here at the XLE, if you look at that bar on Thursday, that was kind of interesting to me because it seemed like some money rotated into the XLE and the XOP on Thursday when the bios were breaking down a little bit and tech was being sold off. I actually went long the XLE and SOP on Thursday, thinking that maybe if we had a decent reaction to the jobs report on Friday, that could have been something to make the rally a little broader and get some participation from some of these commodity stocks. And then, they were green on Friday, and the market didn't look great, so I wound up selling them. And now, today they'll probably be up a little bit. So I'm going to see if, any traction gets built here in the XLE and SOP for a potential trade. I would think if the XLE is any good, it's going to probably want to get above 68-ish and hold, and maybe start a new move to the upside. And on the XOP, that's going to have to probably get above just say 39-ish, and then again these are broken sectors below every moving average. You're trying to bottom fish. At some point, when you do bottom fish, it works over time, but it's not a winner's game. It's something that takes time and takes risk. But at this point, you're going almost 2 years of this commodity debacle. At some point, you might get more than just a 2-day bounce.
And there was a little bit of news here on Twitter, folks. We got the Brentster digging here. Chairman Dorsey buys 31,627 shares at $27.67. That was revealed in a Form 4 this morning. So there's the second executive in the company making some purchases here under the $30 level. Stock immediately moved on that. We're back over $28, over Friday's high, $27.90. So a little bit of run going here in Twitter. Just moving on here to some of the other stocks, the retail stocks that have earnings this week. A lot of traders, like we just talked to Anne Marie, and she just doesn't follow the retail sector. Is it something that you like to follow or not?
Not recently, to be honest. The movement there hasn't been that fluid. At times I'll look at key retail names that are acting strong, but not that sector overall. For a while, my traders are watching Under Armour and Nike. Also, was a big mover, and but just for their setup, I don't really play the RTH, and it's not something that is in my go-to list. You can't have a go-to list with 8-9 sectors, so it's just not one that. At certain times there are sectors that move into my go-to list and leave my go-to list. But for now, retail just really hasn't been something so interesting to me.
Yeah, additional news coming out on Twitter too. A deal here with the NFL. We'll have to see.
Ooh,
Yeah, yep. So a couple catalysts going here. I knew that spike just wasn't regular buying. So some good news, some catalysts coming out here in Twitter. Now trading up $1.20. It's funny we were talking about it a lot this morning. Before we let you go, Scott, just these oil stocks. I know you were talking about the commodities, and you like to see falling prices. Barron's also mentioned, stocks like ExxonMobil and Chevron here. Good dividends, a little bit of dividend protection here. Are these just two broken charts for you to get interested in? Other places to put your money? I mean, Chevron here under $84. Any interest to you?
well, as a trader, maybe for a day and a half reversal trade, but as an investor, it all depends on your time frame. These are behemoth companies with huge dividends, and they do have buybacks. And at some point, whether it's 2 years or 3 years from now, oil will probably be back above 70 or sooner. So I feel like, as a trader that tries to create alpha, these have been below the 200-day and the 21-day for over a year. They've been nothing but a trade or an avoid for an investor now. Could be interesting, to dip your toe in if you have a horizon with it and a thesis on it. So, sometimes people, as traders, you like to buy stocks high and sell them higher. As an investor, sometimes the most profitable trades are, buying some in the hole. So, at least if you're going to do that, you want to do with blue chip companies that are not going away. And I'm sure Chevron and ExxonMobil are not going away. So if an investor wants to dip their toe in, at these levels, I wouldn't say no. I would say don't go all in and have a plan. You might have to do it in a few tiers.
Okay, we've been on the line with Scott Red Dog Redler. He's chief strategist at T3 Live and T3 Trading Group. He joins us here every Monday. Scott, thanks for coming on. We'll speak to you again next week.
Sounds great. Have a good one.